Joining us this morning, TD Ameritrade Chief Market Strategist Kinahan, Washington Crossing Advisor Senior Portfolio Manager Kevin Caron. Guys, good morning. Good to see you both.
Good morning, Carl.
Good to be here.
Kevin, any reason to think that September might contradict the seasonal pattern this year?
Yeah, well, you've got a world that's awash in liquidity, and the conversation you were just having really puts a fine point on it. We're at a point now where you're not seeing a lot in terms of growth. In fact, there's a lot of data out there that's pointing to maybe a weakening situation. You're going to get the ISM later today, which is going to be very telling about the real economy here in the United States during August. But if growth doesn't break, let's say growth were to hold on here, and you have all this liquidity and lower interest rates, there is a case to be made for higher multiples. No one wants to make that case this late in the cycle, but that would be the good case, that you have supportive central banks, low interest rates, really nowhere else to go, and unless you get growth cratering over, there is a bullish case to be made for stocks.
So is that the case you're making?
No, it's essentially we're following the data, but we need to be able to see both the good case and the bad case, and that would be the late cycle move to a frothy top, more on expanding multiples and liquidity than anything else. It's not really our base case, but it's something we need to be aware of. We are looking at the data, and what we're seeing is that global trends are weaker. Manufacturing around the world is obviously weak. That's why ISM for August is so important for us today, because that's really an early indicator about the cyclical part of the economy here in the United States, and it's very fresh data. So that's going to be meaningful for us to watch. But we're watching the data, and we're kind of in that middle place where things looked stronger earlier in the year and have calmed down as we've come through the summer.
JJ, where's your head ahead of some of these important prints?
Well, you know, I like Michael's point earlier about the fact that we haven't really gone anywhere in a year. But one thing that has changed significantly, Carl, is about a year ago we were trading on the VIX at near a 16. Now today we're going to open, it looks like, at about a 20 level. And so with that, I think you're seeing what the real crux of the problem is for many people, particularly a lot of retail traders, and that is we're just stuck in this range, and it seems hard to see how we get out of it as long as the tariff situation exists. So it's going to be a matter of bouncing back and forth, I think, between about 2,750 and 3,000. We're, holding 2,900, which I think is a great thing overall. But again, I look at what our clients have done over the last 2 months, Carl. They've actually been net sellers of equities and buyers of shorter-term fixed income because they're waiting for this moment, so to speak. Who knows when it's going to happen, when we get some settlement one way or the other. And I think we're at a point now where, of course, we care how this settles, but the market just wants some settlement one way or the other. One of the biggest things that concerns me about, the earnings season that just ended is nobody talks about infrastructure or investing in infrastructure. And if you're a CEO, how can you make the choice to do so when you don't know where we're going to land? It's one of the reasons stock buybacks, I think, will continue and continue to support many of the stocks in this market because companies have the cash. But why would I go to infrastructure when it's the type of thing that can get me fired, whereas, buying back stock is not necessarily going to do so until there's a clearer picture?
Kevin, one of the reasons that the volatility index is up around 20 is that to an unusual degree, almost all stocks are moving in the same direction on a given day. So everything seems to be correlated. We're very much in this macro mode in terms of how the market's behaving. Does that give you anything as a kind of a fundamental asset manager in terms of opportunity to say that some stocks don't belong up here or down here, given that the whole market's moving as one?
We look at a much broader group of things than just the VIX. There is the month of August was bad for financial markets. There was a lot of nervousness and anxiety that is shown in the VIX. Very hard to trade the VIX, we found, but ultimately, what we'd be concerned about is if market psychology begins to bleed into business decision making and how investors feel about stocks and consumer confidence, that's the tipping point. So at Washington Crossing, we've taken our equity allocation down from more significantly overweight earlier this year to just above our neutral level. But the trend has been down in terms of our data and down in terms of our allocation to equities. And we're just looking to see whether or not the sentiment in August now spills over into weakness here at home. And we're just not there yet to cut to a bearish case, but it's clearly weaker.
All right, guys, one more reason to pay close attention this week. Kevin, JJ, thanks, guys. We'll see you soon.
Thanks, Carl.
Thank you.